Hey, what's going on, everybody? Back again here with another live trading day in the markets. You guys can see me execute live buys on these dividend stocks as well as my rationale behind purchasing them. Looks like we have a little bit of a dip here today. The Dow is down about a little under 300 points. So nothing too serious. The last couple Fridays, there were pretty big red days, and I was able to get some stocks on discounts. Just looking at my portfolio here, nothing that really just jumps out to me in terms of what's a really good bargain price right now. But I practice dollar cost averaging, so every week I'm trying to put at least a couple $100s into the market. If I kind of just sat around all day trying to find the best position to enter a stock in, I would probably never invest because of analysis paralysis. So I found that this strategy works really well for me, but I know it might not always be the best strategy for everyone, and that's totally okay as well. If these stocks go up or down by next week, I'm not going to be too focused on that. I'll probably, to be completely honest, forget that I even bought them because, I know I did the research beforehand to know that these are going to be stable companies. They're going to be able to weather the bad storms, even in recessions, and they should be able to continue to return shareholders value for years to come. Again, none of the trades that I make are really for the short term. Most of them are for long term, 5+ years out, even longer than that. Basically setting the portfolio on autopilot after purchasing them. Also, the stock portfolio is now nearly at 22,000, and I really do want to thank all the people who have stuck with me for over a year now since I've been on YouTube. The portfolio, when I first started making videos a little over a year ago, was only a third of the size it is right now, and we've definitely come a long way, and to be honest, we're just getting started. I'm just going to continue to make these videos where I show them the progression of my portfolio, and I really appreciate everyone who's stuck by my side as well. Also, quick note, when I looked at the portfolio this morning, opening up Robinhood for the first time, I saw this little notification about Boeing cutting its dividend. At first, I thought it was the company Boeing that actually cut its dividend, which would have been quite a hard pill to swallow, but it's actually one of their suppliers that's cutting the dividend, not Boeing. Huge relief there. All right, so the first stock that I'll actually be buying today is Medical Properties Trust, or ticker symbol MPW. So this trades at $23.21 right now. I usually invest in companies that have very large market caps, but MPW, its market cap is around $12 billion. So this is actually a pretty small company for my standards. But in the time that I've owned this stock, it's actually almost doubled in share price based on when I first bought it. It's been one of the leaders in the healthcare REIT sector in terms of return value. And this is a company that's really expanding fast. In the fourth quarter, they announced that they were going to acquire hospitals in the US, Spain, and Portugal for around $900 million. That's a pretty big acquisition there, and I'm excited to see what they can do with that. To go over their business model really quickly, this is basically just a mix of real estate and healthcare as they lease out the land that the hospitals do business on. In December, they announced that they were going to acquire more than 30 acute care hospital facilities in the UK for nearly $2 billion. So these guys are really growing fast, and they have an international presence because the last time I checked, healthcare is universal, or is it? 13 billion of the company's $16 billion in assets are actually in general acute care hospitals, which means that these are the hospitals that provide more of a broad cluster of basic medical and surgical treatment services. And that includes overnight hospital stays as well. It's crazy because if you or me wanted to invest in real estate, that's going to be a lot of upfront work and a lot of paperwork and research that you'd have to put into it. But I'm basically giving my money to Medical Properties Trust, and they do all that work for me, and I get a small cut of their profits while I sit and basically do nothing and just collect those small checks. So they have been pretty slow at increasing their dividend. It only went up a penny last year to about 63% of its cash flow being used to pay out its still pretty attractive dividend. When I first bought into this company, it was close to a 7% yield. Now it's closer to about 4.5%. And since this is a REIT, they are taxed at a heavier tax bracket, so you might want to consider that if you are looking into this company. As you guys can see here, the first time I actually bought this was in February of 2018 for $12.32, and luckily has been going up since then. And I know it's always hard to buy stocks that are near its 52-week high, but I don't really see any signs of this stock slowing down. So we're going to make the trade here now. I will just double my position into it since the share prices are pretty small. This only makes up less than 1% of my portfolio. So let's make it a limit order. I don't have the Robinhood fractional shares yet. I have been seeing some videos of people having access to that, but it looks like I'm on the wait list apparently with over 1 million people. I actually still haven't even gotten my Robinhood debit card actually yet. I'm still like 30,000th in line somehow. I don't know how, all the times I've been tapping on that to move up. So let's do it for trading hours for today. And let's just buy 7 shares. It's going to cost $162. And then we'll swipe up to submit. And hopefully it went through. It will go through eventually here. Very soon, I'm sure. So 7 shares or 14 shares I'll own of this company. All right, before we move on to the next stock, don't miss this opportunity, guys, to join our investing journey by subscribing to the channel and smashing that like button. It really does help small-time YouTubers like me out. The next stock I'm going to be buying is one that I actually don't even own yet. And if you guys saw my last video, which not many of you actually watched, basically talked about Medtronic's business model, how it compares to its rivals, and how close it is to achieving that legendary Dividend King status. So make sure you guys watch that video after this one. I'll be sure to link it at the end here. Basically, I know some people had some issue with the forward or the PE ratio of 34. Now that's the trailing PE. I really like to use the forward PE a little bit more. I feel like that's a bit more representative of how the company is going to be doing now and in the future. So when you take into forward PE into account, it's around about 19, which is actually quite better than most of its peers. Boston Scientific and Abbott Laboratories are its main rivals, and their PEs are much higher than Medtronic's. So this is, again, a stock I really like for the future, and I'll be buying a few shares of it to open up a position today. So let's make it a limit order, and we'll just do whatever it's trading for right now. And we'll buy 2 shares for $237. And we will swipe up to submit. And there we go. Now I am officially an owner of Medtronic and will be for the foreseeable future. I know I only bought 2 shares of this stock, and people in the comment section are going to be saying, you know, how irrelevant this is and why even bother investing, and that I'm an idiot and I should only be buying Tesla stock and ETFs.
Now I know most people at this point are going to pause the video and be like, nah.
Yeah, but
Obviously, I'm practicing dollar cost averaging here. So for my opening position, I only bought 2 shares. But as time goes on and we progress throughout the years, I'm obviously going to be adding to this position. So don't leave me those ignorant comments in the comment section. Okay, and then the last stock I'll be buying today is none other than Bank of America. Now, this was a stock I was looking into because I was researching its business model last night, and banks, they operate with a very special kind of business moat, in a way that if me or you try to copy their business model, we would probably go to jail for operating a Ponzi scheme. But if the government is involved in it, it is somehow totally legal. I will just leave it at that for now. Banking is a very safe sector. We saw what happened in the last financial crisis with big banks and who came to the rescue of them. And I had been buying a lot of JP Morgan Chase earlier this year, which is actually the largest U.S. bank at a $431 billion market cap. But Bank of America isn't that much further behind. Currently, it's around $311 billion. I don't think Robinhood is accurate here, but that's not a surprise to anyone. And this is a very time and tested business model. In the last 2 years, Bank of America has returned $63 billion in capital and to shareholders via dividends and share buybacks. Bank of America also had $27 billion in profits last year, and that doesn't really seem like a company that is suffering too much, in my humble opinion. Now, this is a company that's heavily influenced, though, by whatever the Federal Reserve does with its interest rates. And that's always going to be a cause of concern because there's not really much that they can do to control that. But I think that people are always going to be needing somewhere to go for business loans, for home loans, or just somewhere to store their cash. I have the Bank of America credit card, and I absolutely love it. I've never had any problems with it, and its cashback offers are better than most of the ones out there. And again, this is just me building my position in the banking and financial sector. I don't think I have enough exposure to it, so I want to obviously have more exposure to be more diversified. Regardless of what it's trading at right now, I want to say its forward PE is around 10, which is pretty good and in line of its competitors. Now it pays just over a 2% dividend yield, and that's still better than just leaving your money in a Bank of America savings account that pays like 0.02%, and they'll pay you a couple pennies each year. So I want to be putting my money in this company, and hopefully it'll go up in price and be giving me dividends for the foreseeable future. As you guys can see, it's up 125% over the last 5 years. Obviously, that doesn't mean anything necessarily going forward, but hey, if it does that over the next 5 years, I'd be very happy with them. And I definitely don't see these big banks slowing down really ever if this business model can continue. All right, let's buy into more of this position here. So I'm up 24%. So actually, I'm on pace to get that 5-year return of 125%. So let's buy a couple more shares here. $306 available. Let's just double what I currently have, but let's make it a limit order instead. So 34.47. And market hours till 3 p.m. today. And that'll cost about $137. And that sounds good to me. So let's hopefully add a couple more shares. So now I own 8 shares of Bank of America. It makes up about 1.3% of my portfolio. So that's really going to do it here for this video, guys, in terms of today's buys. Nothing too crazy here. I'm sure by next week that Tesla will somehow double in stock price again. But let me know what you guys are buying in the comments, and don't forget to like and subscribe. I probably will have a dividends video on all the dividends I received in the month of January. So be sure to be on the lookout for that in this coming week.